Hi everyone, welcome to another video by Optionables. My name is Saket. In this video, we are going to look at what happened to the markets, what we can expect from the markets tomorrow. Tomorrow also happens to be the expiry day trade, and finally we are also going to look at what happened to today's trade. So today's trade was quite difficult to manage. So our system trade actually gave us a loss, but we did some small adjustments where we were able to end overall with around 2.5 lakh profit. So we are going to discuss more about that as well. Yesterday, if you had actually looked at US markets, Nasdaq was down almost around 2%, even Dow Jones was down almost around 1%, and SGX Nifty also indicated a pretty bearish start of somewhere around 170 points. So the markets did end up opening around 80-90 points lower, and further immediately the markets fell and it traded somewhere around 150 points lower. So throughout the day, the market more or less consolidated around 17,500 itself. Within the first half an hour, the markets actually came down closer to 17,500, and throughout the day, the markets consolidated around 17,500. Then what we saw, towards the mid-afternoon, the sell-off further intensified and the market ended up breaking 17,500 also. So the markets came below 17,500, and also at a point in time it came towards 17,450. That means it was almost down around 200-220 points. From there on, we saw a fantastic rally in banking stocks, especially Kotak, ICICI and Axis. So overall, Bank Nifty, even though Nifty ended around 1% negative, Bank Nifty ended 0.5% positive. So since we saw such a fantastic rally in Bank Nifty, which almost went up close to 450 to 500 points from its low, so Nifty also ended up recovering from the lows of 17,450 all the way to 17,600. So again towards the end, we saw this rally fizzle out and Nifty coming back towards 17,550. But the positive thing is banking stocks did extremely well towards the end, and this positivity also helped to lift Nifty. But when we actually focus on the negative things, so TCS came out with the result, and the result was in line with estimates, and TCS didn't react much. But the entire IT sector actually underperformed. Infosys was down almost 1.5%, even Wipro, HCL, everything actually ended up in red. So along with this, to add to this, even Reliance came down by almost 2%. So now you can clearly see why the index actually ended in red, because Reliance as well as Infosys is considered to be heavyweights in Nifty. Reliance has the highest weightage, Infosys has the second highest weightage, and both were down almost 2% and 1.5% respectively. And the other next weightage is with HDFC Bank and HDFC. Both of them more or less traded flat, and that's the reason even though Bank Nifty ended with 0.5% positive, Nifty ended almost 1% negative. So that will bring us to the next question, what exactly we can expect from the markets tomorrow, because tomorrow also happens to be the expiry day. So post which we are going to have almost around 4 days holiday. So one more thing what I would like to tell you is when we have such a long weekend, there are chances that we are going to see very good decay in next week option premiums. So we'll be taking some trades, positional trades as well as intraday trades with next week options also tomorrow, because we are expecting some good decay since there are 4 days continuous holiday after this. So now coming to what exactly we can expect from the markets. If you actually look at Nifty, Nifty is trading at a very crucial zone, so of around 17,500. This also happens to be a very strong support for Nifty on technicals, and it is very crucial for us to see whether Nifty will actually end up holding 17,500 or not. So when you look at in terms of open interest is suggesting a completely different set of data. So when you actually look at the data based on open interest, the sentiment now is pretty bearish. There is somewhere close to 90 million call writing compared to around 45 million put writing. So there is aggressive call writing at higher levels such as 17,600, 700, 800, all the way up till 18,000. So that's the reason we are expecting, even though Nifty goes higher, it is going to face some stiff resistances at 17,700, 17,800 and so on. And on the lower end, as we already discussed, 17,500 is supposed to be a very good support, but on the lower end, if you look at the open interest or technicals, 17,300 must be held for this expiry, and this is what our expectation is also. So broader range for Nifty, what we are expecting is 17,300 to 17,800 with slight bearishness. Because there is so much of call writing, we are expecting the market to be slightly bearish. So when you look at Bank Nifty, the open interest is more or less suggesting neutral because there is equal amount of puts and equal amount of calls. So the broader range of Bank Nifty still ends up being 37,000 all the way up till 38,500. Tomorrow, in case if we see a positive opening, then we can definitely narrow down our range from 37,500 to 38,200. So right now, we are expecting the range of 37,000 to 38,500. So a pretty broader range. So now if you actually even look at the FII DII data, today again FII sold somewhere around 3,000 crores. So totally in a week they have sold almost close to 10,000 crores, and DIIs ended up purchasing around 800 crores. And it is pretty obvious which shares FIIs have sold. The entire IT pact is down, Reliance is down, even metal pact was completely down. So it is pretty obvious which are the sectors they are selling right now. So now we'll be moving on to a screen recording where I'll be discussing more about what exactly happened to today's trade on a chart. Plus I'll also be showing what are the positions we are carrying for tomorrow. So both of this I'll be discussing in the screen recording, and without wasting further time, we'll be quickly moving on to that and we'll look at what happened to today's trade. And some more quick updates is that we are going to announce the internship result this weekend. And also yesterday we had received close to 1,500 responses just in a few hours for the workshop, one-day workshop. And over 500 responses were from Bangalore or Karnataka region. So right now Bangalore is in a lead, and in case if you want the workshop to happen in your city, make sure that you share the form to many people and also help them fill it. So the form link will be open up till Friday, so based on how many responses we receive and whichever city is leading, so one-day workshop will be conducted there for free. We'll be quickly moving on to the video, and if you're liking the content, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining. Welcome to the video, guys. So you can see the today's M2M here. So overall we made around 2.57 lakh profits. So this includes a lot of Nifty as well as Bank Nifty trade, but I'm going to give you a gist of what exactly happened and how did we end up adjusting the position. So the thing is, let me just come to the chart right now. So right over here we have chart of Nifty as well as Bank Nifty towards our left. So this is the chart of Bank Nifty, and today we took trades in both Nifty as well as Bank Nifty. So let me just try to explain what exactly happened. So morning we had taken 17,600 short straddle. So we had sold both calls as well as puts, and when the market started falling, so the market started coming down here. And as the market started coming down, the P stop loss got triggered. So we had placed a 40-point stop loss, and the P stop loss actually got triggered. So that means now we were only left with a call leg. And the thing is, as long as the market either consolidated or went down, it was completely okay. Because let's say I'm only left with a call leg. So as long as the market remains low, this call leg will end up decaying and it will end up giving me good profit. So then we saw that the market actually ended up consolidating for almost 2.5-3 hours. So it was a huge and big consolidation. While this was happening, I had also created one more short straddle at 17,500. So now the positions which I had were 17,500 calls, which I had shorted, 17,500 puts, which I had shorted, and 17,600 calls, which I had shorted in the morning. So this put anyways has triggered the stop loss. So now as long as the market either consolidated or came down slightly, it was pretty good for me because I had a short straddle with extra call leg. So the market did start to come down and I was in a very favorable position until the market started shooting up again. So let me just stop Nifty at this. I'll come back to Nifty after I discuss Bank Nifty. So all I want you to remember is till 1:30 I was in a very good position because the market fell, consolidated, and again came down. And overall, with Nifty, I was in a profit of somewhere around 80 to 90k. So I was doing very well, and I expected if this continues easily with Nifty itself, we can end with around 1.5 lakh. So now, just keeping this in mind, let's go to Bank Nifty and see what was happening to that trade over here. So from morning, we had done a 37,400 short straddle. So from the very beginning, we were at 37,400 and we created a short straddle at around 10 o'clock and we added one more around 12 o'clock. And throughout the day, we had done this particular short straddle, right? So till 1 o'clock, Bank Nifty also had given us a very nice TK and we were at a profit of close to again around 90,000 to 1 lakh with Bank Nifty. So Bank Nifty trade is pretty simple. So none of the stop losses were triggered. The market consolidated in hardly 100-point range and we were at a profit of close to 1 lakh. So totally up until 1:30. So this is very important. Up until 1:30, we were at a profit of close to 1.8 to 1.9 lakh. So we were going really well, and if the market had consolidated easily, we could have ended the day with over 3 lakh just with the same positions without adding anything. So now I was just waiting and hoping let the market consolidate. It is going to be pretty good. Immediately after this, the market started to shoot up around 1:30. So the thing is, for Bank Nifty, it was absolutely fine. So there was nothing much to worry, even though the market started to shoot up. So the short straddle, one leg will trigger the stop loss. We anyways had the other leg, so there was nothing much to worry. But the biggest worry came with Nifty. So the problem was much more with Nifty because as the market came down here, even our 17,500 PE had triggered the stop loss. So that means we are hit on PE 2 times. 17,600 PE is hit, 17,500 PE is hit. That means we are only left with our call leg short. So we are short on 17,600 calls, 17,500 calls. We were only short with the call legs now, and if the market ended up coming back, then we would be in a very bad position. And that is what exactly started to happen. So now here with Bank Nifty, we had almost around 1 lakh gain. So that slowly started to come down. So from 1 lakh, we came down almost close to 50k to 40k. So somewhere around this range. So the profit started to fall as the market started to shoot up. But in case of Nifty, it was completely different. So forget about profits actually coming down. We started to go to a huge loss. So with Nifty, the losses started to pile up somewhere close to 60 to 70k. So with Bank Nifty, we have a profit of close to 40k, 40 to 50k. With Nifty, we have a loss of close to 60 to 70k. So overall, from a M2M of 1.8 lakh positive, so from positive 1.8 lakh, we fell down all the way to negative 30k. So all this happened just in matter of 10 to 15 minutes. So you can see this is a 3-minute chart what I have put. Hardly around 5 to 6 candles. So hardly around 15 minutes is all it took for our M2M to come down from 1.8 lakh positive to 30k negative. So the thing is, now I thought, okay, the thing is the market is right now trending. So here is where I add some discretionary to my trade. So up until now, it was mostly system based. But the thing is, if you remember past 2-3 days also haven't gone that well, even though the losses are extremely minimal. So around 30,000, around 50,000 and so on. It is still not positive. So it is still in negative, but very minimal losses. So here I thought, I have again lost 30k. So let me risk a maximum of 1.5 lakh. So I am ready to take maximum of 1.5 lakh risk. Anyways, I have lost 30k. And I feel that the market might actually end up higher. I'm having this feeling that the market will go up because Kotak Bank is strong, Axis Bank is strong. So banking stocks were looking very strong. And that's the reason I felt, okay, maybe there are chances that the market might end up heading higher and we might see a rally. So what I did, I ended up shorting 37,500 naked puts of somewhere close to 3,000 quantity. So this was trading around 150 rupees and I placed a stop loss at 200 rupees and I'm like, okay, so let it now go. In case if it is going to hit 200 rupees stop loss, let it hit, because it's well beyond my control what is going to happen. But let's say in case the market actually ends up rallying, then I'm going to make pretty good profits. My idea was the market will end up heading higher. So as I expected, the market did end up going higher. So this particular put leg all the way from 150 rupees dropped to 80 rupees. So luckily for me, from 150 rupees, this came down all the way to 80 rupees. So all I was looking for is to make around 1 to 1.5 lakh. So the thing is, since I was short on 3000 quantity for somewhere around 150 rupees, I had placed a stop loss at 200 and I placed a target at 90 rupees. So the put leg made a low of around 80 or 70s and odd. But the thing is, my order actually got triggered at 90 and overall, I actually ended up booking close to 1.9 lakh with this particular trade. So this trade actually went really well and all the losses got recovered and we came to a positive of somewhere close to 1.8 lakh. And after that, I had created one more short straddle at 37,700 and the market more or less traded there throughout the end, and even that gave us pretty good profits of somewhere close to 50 to 60k, and overall we ended with a positive of 2.5 lakh. So this is the point where we actually added some discretion to our system based trade. So maybe if we had just left with system, Nifty would have triggered the call stop loss and we would have ended in a much worse position. So what I did is I closed all the position. So this is very important. I closed all the position because I was seeing that, okay, the market is heading up higher. So I ended up closing all the positions and I created a fresh naked put short of 37,500, 3000 quantity. So my idea was pretty clear from beginning. The maximum I am ready to lose is 1.5 lakh. That means if I'm going 3000 quantity, I have to have a stop loss at 50 points. So in the worst case also, I'll just end up losing around 1.5 lakh. So this was the trade which we ended up taking and it went really well, and luckily it went really well and we were able to end with profits. So now coming to tomorrow's trade. So here is a very simple short strangle what I have actually done. So that is 38,000 and 37,500. So you can see the range. So it is almost covering positive 1% and negative 1%, positive 1.1 and negative 1.1%. So my personal idea based on open interest is that the market will more or less end up consolidating between 37k to 38.5k. And I am not personally expecting any huge gap up or gap down. So that might happen in case if US is positive and US ends up trading higher. So there is a possibility of that happening, but I am not personally expecting any big gap up like 1% or 1.5% gap up. So that's the reason I have taken this trade, and the adjustments to this is very simple. So in case if the market ends up opening closer to 38,000, I'll just simply short a 38,000 put leg and create a 38,000 short straddle. In case if it ends up opening around 37,500, I will short a 37,500 call leg and end up creating a 37,500 short straddle. So this is a very simple adjustment what I have in mind. So the thing is the quantity is also pretty less. So even let's say there's a huge gap up or gap down and the market let's say opens around 2% higher, somewhere around 38,500. So even in that case, we will be losing somewhere around 2.3 lakh, which is almost close to 0.5% of our capital. So the quantity is pretty less. The only reason why we have taken this trade In case if there's a flat opening, maybe we can end up making around 70,000 or 70,000 in the beginning itself. So that will give us a pretty good start to the expiry. And let's see, maybe if possible, we'll try to end the expiry with around 1.5 to 2 lakh more. So that will be a pretty good start for April as well. So let's see how it goes. Right now, all we can do is hope for that there is no huge gap up or gap down and the market ends up consolidating. So with this, we also come to the end of this video, and I hope that you guys have liked this video and also have gotten to learn something from this. If so, then please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining.